What's going on, everybody? It's your boy C-Zar here. I just made this video and I'm redoing it because I feel like I took too long and I got redundant. I repeated the same stuff over and over again, and I finally got to the end where I think I've got everything in line. So this is take two. Let's get it right. I want to talk about this tweet that I made, this last tweet that I made on May 17th here. It was 2 days ago, talking about the 123 RSI on a weekly scale, blah, 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 blah. So I've got the 123 RSI pulled up here. We are on the monthly right now. That's why it looks weird. Let's go to the weekly. So the reason I'm redoing this video is because I want to try to make it short and sweet for everybody. I have a real history of dragging things on longer than I need to. Let's see. So we're going to draw a line right here where the RSI rejected. Again, this is all in reference to my last post on Twitter. I'm trying to make sense out of it in case anybody read it, and if not, if you didn't get to read it, it's still, I think, valid information that should be considered. So this line, it might not look significant, but if we go back in time, we can see that we found support here twice. We rejected it here once. We found support here again and again. And I'm counting that as support, yes. We had a little standstill here, but not really. Support, broke right through it here, and rejection now. So it's not the most significant line in the world, but at times in Bitcoin's history, especially in bear markets, it seems to find significance on this line. And not always, but it looks like half the time that it interacts with this line, at least, if not more, at least half the time that it interacts with this line, it finds significance. And we're finding significance on it now. What I want to talk about is we found support here, we found support here, we found support here. We've only found a rejection on this line once, twice, only twice. So I want to go back and look at what price did on its first rejection and maybe rub that crystal ball and get an idea of what's going to happen with this rejection. So we can see here, I'm going to zoom it in here. So here's the rejection right here on this candle body right here. I'm going to zoom it in a little bit more. If we were to take a measurement from top to bottom, first off, I want to say that this rejection brought us to the cycle, the bear cycle lows. And we did that in a matter of 1, 2, 3, 4, 5, 6 weeks. Very small candles and then down to a very big candle with a big wick. Got a big old wick right there. 1, 2, 3, 4, 5, 6 weeks. A month and a half. Happened in a very short amount of time. We dropped 48.77%. There's something else I want to point out. Is since we're looking at the 123 RSI, I've got the 123 MA here. That's what this purple line is. I want not just to measure the relation in price, but let's measure the relation to this to this MA in price as well. And I want to try and be exact. I want to try and be very exact with this. Let's see. Yeah. Like I mean, that was basically pretty exact. I don't want to measure up here, right? Because that's weeks away. The line moves up every week. I'm going to be on this exact week right here. I feel like that's, yeah, I had it right the first time. 13.33%. Maybe that's a little low. Let's see. I want to be exact because let's is that, I don't know, man. That looks pretty good. Yeah, 13.44. I know it's over here, but this part's touching the line, and it's the same whether I'm over here or whatever. 13.44. That looks right to me. Okay, so 13.44% away from that line. If we go to our current situation that we've got here, I need to zoom out a little bit. Let's see. Zoom out some more. Keep on zooming, zoomer. There we go. Okay, so we haven't had our drop yet. And since the rejection, it's been 1, 2, 3, 4, 5 weeks. I'm not saying that I expect a dramatic drop. I'm definitely not saying that I expect a drop that's going to be 48% in the next week, or I mean, I guess we've already dropped about 18%. I'm not expecting a drop that's going to bring us down like 40% in 1 week. I don't expect that, but I do expect a drop that will be similar to the one we saw overall over time. If we were to take this line and draw 48.77%, it's close enough right there. This is right at the low for this cycle. And if we go back, right, we're going back because this is the only other time that we've seen a rejection from this point in the RSI, on this long-term RSI. And this RSI reacts very well with this MA as well, I have to say. The only other time we've seen this, we saw a 48.77% rejection, and it was a double bottom. It was a double bottom scenario. Well, here we are again, and we're at a 48.77% rejection if it was to go that low, and that would be a double bottom. If we measure in price the distance from the highest point again up to the line here, oh man, come on, let's see, 15.8%, is that right? Looks a little bit high actually. 14.98, close enough, very close. So 14.98, if you remember, the last one was actually from the previous cycle was 13.48. 13.48 versus 14.98. That's 1.5% off. Okay, quite literally 1.5% off. And there's a difference. There's a difference in the way that this MA is acting right now and the price is acting right now. The difference is we're further away from this line. We also, in this line, have an uptrend in the line. It doesn't curve down until way over here, but it's an uptrend. Over here, we're getting curvature to the downside. I'm going to zoom in a second, but I promise you we're getting curvature to the downside. Another thing to note, whenever we came off the lows for this low over here, whenever we came off from the lows, in about 2 months' time, we saw an 89% pump. Whereas over here, let's go to the monthly scale, because I promise you that was 2 months' time. We can go back and look even. I'll delete all the noise. Let's see. So right here, oh, not even 80. That was in the same month. So shit, we went up 89 in the same month. Wow, that was 1 month that we went up 89%. But in 2 months we went up 82%. So twice we went up 80% within a 2-month span. Where here, from the low, the first month we went up 18%. The second month we went up 54%. The third month we went up 63%. It took us 4 months before we got above the 80% growth mark. What I'm trying to get at is it took us longer to achieve the same bounce. We are further away from this line, and this line is sloping down. To me, this all indicates that price is weaker now. It is weaker now than it was back then. Similar market conditions, but weaker price action for sure. So if we take the top here and we measure all the way down to 48.77%, right, 48.82, it's close enough. That's our double bottom. And this is assuming with 100% accuracy that off of the one iteration we have, that it's going to act the exact same. I don't think that's going to happen. I don't expect that to happen. This is just the reference point that we have. The other things that we've taken note of have shown, if anything, that price is acting weaker. It's taken us longer to get this close to this line. It's taken us longer to get an 80% pump, where it literally did it twice actually in a 2-month time before. It's taking us longer now. I would make the argument that we might actually have a bigger drop on our hands. Maybe it's 51%, maybe it's 58%, maybe it's greater than that. I doubt it, but I want to draw some fibs to get an idea of what we're looking at. And to do that, I'm going to measure it with a fib extension. I'm going to take this low here and measure this high. And I want to make note of this line, the 1886. We're rejecting the 886 right now. This is the 886 of this range. The extension, the 1886, is down here at about $13,200, 240. If we were to draw a line there, let's just keep a line there. Let's also measure it. Why not? Let's measure how far of a drop that would be. 57%. It's less than 10% of a. It's more. It's 9% more than the drop we had last time. And in my opinion, I am expecting a bigger drop than the one we had last time. I don't know if it's going to be 9% bigger, but going from rejecting from the 886 and going back down to the 1618 is a possibility, but going further down to the 1886 is also another possibility. I want to draw the 1786, right? It's 786. Yeah, on there. Okay, and that's a little bit higher. I'm gonna draw another line on that one too, and we can change the color of it to make it stand out. Okay, let's see. We'll make it that color. Okay. So we have our two lines. That's the 1786, the 1886. If we take the low here and measure the current high, assuming that we go down further, I'm gonna delete this blue line because it's just noise at this point. But the 1886 is actually very close to this 1272. They're very close. And when I see fibs line up like that, and the fact that we had a bounce here at this 618 region before this fib was ever configured, I am kind of expecting this fib to be respected, just as I'm expecting the one that had the relevance to the all-time high to be respected. And we can see it was respected all the way down. We had a rejection off the 382 here. We had a bounce off the 618. We rejected the 618 there. We found support on the 1618 down here. We're bouncing off of the 886. We're rejecting it right now. We rejected it here too. What I'm getting at is not only do we have fibs that mark this line down here, but if we take all the noise away and we go back, we also have price indicating that this is a significant zone. And actually, hold on. I keep going back and forth, but the 1272, if we put a line right there, oof, it's a little bit high. Whatever. Right there. Perfect. Okay. If we put the 1272 there, and if it was to go to the 1272, which it could, this would be at a rejection zone, rejection zone, and a support zone back here. It's a significant area. This little high 12 to low 13,000 range is a very significant level. And I think we might be going down there. I think this is where the bottom might be. And we might not go that low. It's completely possible. The only other time that I'm basing this off of, the whole video, the whole point of this is that this RSI has interacted with this area right here, like the 51.7 area. It's reacted with it a few times. I'm on the weekly scale, right? Yeah. And we had support, resistance. The only other time in history that we found resistance at this area was right here. And we're finding it again. And this time we went lower. This is the lowest areas in the RSI that we've ever had. I don't know. That's the main point of this video that I'm trying to get across, is that the last time that we were down here, things were not good. I've been quiet this whole video. My voice has been a little bit reduced because I have a 13-month-old daughter sleeping. I'm not trying to wake her up. So sorry if it's a little quiet, low energy video, but I promise you there's good information. If you liked the video, leave a thumbs up, subscribe. If you didn't like the video, I'm sure you're already gone. So appreciate the effort. I'm going to make some more videos, and I'm going to provide more information. Whether I'm right or wrong is to be determined. It's not about that. It's, you know, this is a learning experience, and I'm just showing you guys what I know. Um, and maybe you can teach yourself. You know, the whole real premise of these videos is not to determine if I'm right or wrong. I mean, for me it is like that's for me, but for you guys, for the people who are watching, I'm hoping that you're getting some kind of education out of it. Not from my predictions being right or wrong. I hope nobody's using this as a crystal ball, because man, I did not call this up here. I called this whole down run pretty much to a T, actually. Starting from up, I did not expect that the bear market was started down here, but basically once we I want to say, I forget where it was. If it was up here, maybe it was right when we broke. I basically called every move all the way down. I literally called every move all the way down. And you can go back and watch my videos to verify that. But it's not about that. It's not about that. What it's about is showing you guys how my thought process works, how I go about it. You know, maybe someone's watching this that knows me and can get a hold of me and tell me, hey man, thank you for helping me out, or hey man, you're doing this wrong. I actually learned this from someone else who knows more than you, and they taught me this way. You know, maybe you'll help me out too. Like it's an educational thing, and that's the whole point of this. You know, I hope you guys are taking something away from it. You know, if it's just entertainment for you, cool. It's fun for me too. It's entertainment for me too. That's the main reason I make videos. But the reason I do TA, technical analysis, is to learn more so that I can have the skills to make better decisions, and you know, just get better at predicting the overall directions of the market. The word predicting, it's not like I'm not making a prophecy here. It's more like statistical analysis, as we've done with this whole video, using past price action and references to the potential future and current circumstances that we're experiencing. This has been a long, drawn out farewell, so I'm going to end the video there. I hope everybody has a good night, good day, wherever you are, whatever you are, and take care and beware. Adios.